Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, November 3rd, 2020. All right, so this will probably be about the last of the opportunities to trade off the technicals, at least for the next couple days, I suspect. I think there's maybe a little more meat left on the latest NQ trade I posted just before the close. A little more downside there. I'll talk about that in just a second. But after that, we're probably going to go to more of a news slash election result driven moves in the futures, more so than on the technicals. That would be my guess. So this week, last week has been, even though I've been keeping it light, just surprisingly profitable on trading. Just looking at the futures, I've been trading off the technicals like a champ. And so I'm going to go over that, and then after the elections and the dust clears, I'll turn my focus back to the daily charts. I'm going to talk on that real quick. Let me jump over to the daily charts, then I'm going to get back to these 60-minute charts. Point out the near-term outlook. I mentioned a lot of things breaking down, or quite a few things, not everything, but some key sectors like the semis. Recently we had this minor uptrend line break right there, breaking a back test on SOXX, the semiconductor ETF, following a divergent high, and they corrected, and they had a pretty healthy correction, from the highs or the back tests, which were about the same. They fell about 7, almost 8%. But the thing is, and the reason I'm holding off on adding any swing shorts at this time, so far that's nothing more than a correction. It's a 8% drop. That's run of the mill for semis, and we hit that 300. About 300.69 support level right there. Pretty decent support. We had a little trading range right here, and it was the top of that trading range. We broke out above it, back tested it, and the trend indicator is also bullish right now. So again, I need a little bit more evidence. Need to see a little more evidence on the market-leading FAANG stocks, tech stocks, and everything else. Just in the last few days, there's been a trend, a rally in the small caps, and a lot of the sectors in the S&P 500. So we've seen a little bit of a broad-based rally leading up to the elections. And again, we'll know. This week, today is only Tuesday. It is election day, but unlike prior years, we have now more mail-in ballots than ever, and it's going to take a while to get those all counted. So we may not know the results for a few days. But this trend indicator I'm referring to, using the 9 EMA or the signal line on the PPO, it's simple. It's bearish when you cross below right there. It tells you you're in a bearish trend, and bullish when you're above, and that's it. And it also acts as support when that zero line right here, that dashed line, is tested from above or below. So again, this might just be the first wave down in a corrective wave, and if that's the case, and we go on take out that 369-ish support, especially that 289-ish support, we're probably going to cross down, and that will be a trend change. And so I think there'll be plenty of meat left on the semis if and when that comes. I look at the weekly chart, and they also look very toppy there. Divergent high. You can see the divergent highs in the past right here. Divergent high, that was the correction. That was easily, these are all double-digit drops, and so far just a minor drop off that most recent divergent high. So I do think there could be more coming, most likely, but again, no reason to jump the gun, especially with the elections coming up. So we'll they say the second mouse gets the cheese, so let's just wait and see what happens here in the next few days as far as positioning for swing and trend trade. Okay, now back to the short term. I've made it very clear over the last couple of weeks, that's where my focus has been, on the very short term, just active trading. You can either do that or stand aside if it's not your cup of tea. But it's been working out very well. Yesterday, or actually the day before, I called, during one of the videos, I believe it was, that I stated that would be the end of the correction. That would be the pullback, was that support. Boom, that was a decent bounce. These are all I think this move up to here was about 3.5%. I made the same call yesterday when we were down there. And then this chart was posted this morning. We had come back up to that midpoint, which had stopped all the other previous advances. And again, arrow breaks show where reaction's likely. So we're right there. And as I said this morning, once we take that out, that's your next buy signal. That should take us up to the uptrend line. That's exactly what happened. And these are anywhere from all these little swing trades I'm about to get to, from 1 to about 3% moves. Remember, if you trade NQ, I don't have to tell you this. Each contract's about 225,000 or close to it, of 200 and yeah, but close to 225, 224 of representing the Nasdaq 100. You don't need to come up with nearly that much cash because they're very leveraged. And then I always say that don't forget about the E-minis. I understand that some of you don't know how futures work, and if you don't, read up on them, learn about them, and they also might be too big for some people's portfolio, and that's where they have those micro contracts now, or the minis, or the E-minis, I think they call them, or the micros, and that's just put the letter M in front of the NQ, MNQ, and what they're doing is they trade off these same exact levels. So you can use my NQ charts, but they have a 1/10 smaller leverage factor. In other words, it takes 10 contracts of MNQ to equal 1 contract of NQ. So therefore, that would fit most people's comfort level. And again, that's what's my preference to trade, because a lot of the targets and support and resistance levels are hit after hours, and you can't get out. You can get out of those too if if things start tanking. Let's just say you were going to hold it tonight, and all of a sudden the election results start coming in one way or another and surprises the market, and the futures make a big move and they start going against your position. Well, you can pull the plug. You can do a market order at any time, 3 in the morning if you want, or a limit order or a stop loss order on the futures. Unfortunately, on QQQ you can't. Once the after-hour session stops, and even if once a regular session stops, that's pretty much when it becomes almost ineffective to trade the Qs. You can only buy and sell with limit orders. You can't use stop loss orders, so it's not going to do you any good if you go to bed or shut down at 4 p.m. and before 8 p.m., when the after hours trade stop. Again, you can't use a stop loss order. You're going to have to manually exit that QQQ position, and then there's that blackout period until pre-market starts the next day or the regular session. So that's it. There it was. Boom. That was this morning. There was a breakout. Well, it didn't happen yet, but that was listed as your next buy signal. Next chart posted when the target was hit right there, and I did say, allow for a brief overshoot of the trend line and move up to that 11,350-ish resistance, because it was right above, and that's about exactly where we went. And then you can see the pullback target was to 1128.10. That was hit, at which point, nope, that's the same chart there. Let's try one more here, and right there, bam, there we go. So this is what happened then. So there was your pullback. There was that brief overshoot, pulled right back to the 1128. Gave you an opportunity to cover that short if you closed your longs there, reversed to a short for a quick pullback trade. We bounced off there, hit the trend line again, which again, this was posted shortly before the close, enough time to get it out to everyone to act on it. And I was expecting a late session dump. Why? For many reasons, including but not limited to the fact this is resistance. There's that downtrend line. You hit it again. It's the top of the channel, very significant level. Remember, it was already a significant level before. And the fact that we've had several more reactions today makes it even more significant. The more reactions a trend line has, the more significant. And then finally, to me, it was a no-brainer trade. I mean, you're going to see it was a strong day in the markets, with active trading ops, long and short. But, at the end of the day, I put very good odds on the fact we're going to get a late session dump because of the nervousness. People that are long, whether you're an active trader today, you made some nice profits on this run up, especially off the bottom. That was better than 3.5%. So it was very logical to expect some late session selling, and that's what we got. Well, that was then. That was before the close. And let's look at that. Here's the NQ, what it did then. So here's what happened. So there was your last objective, time to exit longs and short a pullback there. Now I gave you a potential target down here of 11,155. Now obviously that's the first support because it was the same level I've had, and was the level that acted as support today, and that's what we hit so far, 11,228. But I suspect tonight we may drift down there. And I gave you two options. If you want to just close out, I said you can ride it down into the close, and if you did, that was about exactly a 1% drop. So again, per contract on NQ, you're talking about $2,400 or so on a 1% trade, or 1% pullback. Plenty of profits for you. And of course, if you did the MNQs, you're talking then about 225 bucks per contract for every 1% drop. So that's active trading stuff. Again, market's not conducive to swing trading right now. You can see we're kind of grinding around. Swing traders are really going nowhere, spinning their wheels, whether you have Apple, Tesla, or QQQ or SPY. So that's where my focus remains right now. And then I suspect, and I'll just trail down, set a stop and let it run, that we may go down here tonight. Then, if you get down there, and I set it a little bit above that 155 level, I think it's a good time to probably just go flat, let the elections happen, and at that point we may see, as I said earlier, more of these quick knee-jerk reactions based on results, key states, what's going to happen in Florida. Florida's probably one of the, considered probably the most pivotal state for the elections. And so, as results come in, you're going to see the markets react, and I think it's going to be kind of erratic. And nobody really knows. Like, you could sit here all day long and try to debate or guess what's more bullish, a Biden win or a Trump win, which one's already, Biden win is priced in as far as a popular vote, but again, that's not what wins the election. So let me just leave it there and just show you those levels. And again, whether you rode that short down into the close or not, whether you're flat, I think maybe a little bit more downside, and then probably a good time to get out and just sit back, let everything happen, and then we'll I'll continue to post levels and what I see on the charts, and it's up to you if you want to trade it. One last thing to note on this 60-minute chart before I leave it. I'm zoomed in again. That's that downtrend line right there. PPO is curling down, starting to roll over. It was pointing, when the PPO line, the orange line's above the zero line, the trend's bullish. And you get a crossover there. So you're starting to roll down, and you're rolling down like right here. You had a crossover, and that signaled a trend change. There was a little whipsaw, but there was a crossover, and there was a trend change, a drop. There was a crossover, and there was a trade to be made. Again, not much, but a couple percentage points, and again, that's all it takes for an active trader. So this is, again, I'm living in the world of the 60-minute charts right now, and once the elections are over, you will see me gradually, or more immediately if we see a lot of stuff, turn my focus back to the daily and weekly charts, and I'll start looking for both sectors and individual stocks that stand out, long or short. I'd just like to see which way things go this week. QQQ traders, I haven't forgotten about you, nor do I take my eyes off the QQQ, even if I'm trading NQ. This is what it looks like here. We had those divergences that I pointed out, the extended divergences when we put in that marginal new low yesterday. That played out for the bounce so far. And, who knows, maybe that's a little bull flagging action. Possibly there's a nice move up there, so that could break to the upside. So again, if you shorted the second tag of the trend line on NQ today, don't fall in love with that. Either take profits. You're at the first pullback. You can see right here I have 273.66. That was support. It was a resistance right there, and we're back there right now. Trend indicator, PPO signal line has crossed above the white line here, above the 0.50, but it's still below the zero line, and that's usually between these two right here. Sometimes it's a zero line, the white dash line, that does a good job of defining the trends, and since here it said trend cross from bullish to bearish, that's where your crossover was. Sometimes it's this 0.50 line, so I like to use both. But either way, if you go by the last of the two to cross, we're still in a bearish trend right here. So if we roll back down, that keeps that trend intact. That's more of a intermediate type stuff. But again, it's going to be, it's kind of, it'll happen together. If we break out above the trend line, this downtrend line right here on the QQQ 60-minute chart, you're probably going to take that trend indicator and flip it bullish as well. And remember, don't forget, we fell back within this trading range on QQQ recently, and we never made it all the way to the bottom of the range, and that's usually the case. And that's also the case with a lot of these market-leading FAANG stocks, and I'm kind of jumping all over the place. 60-minute chart, I didn't have a box on Apple. I did have that stock split bull trap buying climax range. I've talked about that ad nauseum. Unless you're new to the site, what happened back here? I highlighted that in the past, yes, stock splits are generally bullish for a stock, but in not all cases. I went back, decades on Apple and showed you that after a very prolonged uptrend and with the technicals confirming, that is often marks a top when you have these stock splits. The retail crowd jumps in buying, thinking Apple can only go up after a split, and so far everyone who chased the split the day of and the rally after, they were trapped, and that's what we call a bull trap or buying climax. And we rallied back up. They almost started to get even, but we fell shy of that range. Again, that was the stock split the day of and the rally thereafter for the next couple of days, and we're still well below it, and that's bearish on Apple. I don't see a lot now. We had potential divergence on the RSI or the PPO here, but it was burned through. So there's Apple, not looking great. Would I short it right now? Again, I'll just wait for swing shorts. I'm just living in the active trading world, and I do look at these charts when trading NQ and QQQ. But Amazon, you could almost give it a boxed in range like this. Let me do that. I didn't have a box on Amazon, but for months now, going all the way back here to, was that early July, it's traded in this range. In fact, I thought I had a box. No, I must not have. Similar to QQQ, but there's it broke out there, failed, had another breakout, failed, and I often say when you get these trading ranges, again, what I boxed in there, once you enter the range from above or you rally up to the top of the range, but if you rally up to the top and have a false breakout, you're usually coming back down to the bottom of the range, and came close but not all the way. So that might indicate one more thrust down. There's also resistance on Amazon at 30.90, about 30.90 or so right there. Microsoft, there's the box right here. Probably should shade it up a little so you can see. Let's say fill color like this and give it a little bit darker color. And that's the trading range there. And so the same thing happened on Microsoft that I just showed you on Amazon. We broke out. The breakout happened to be with divergence and overbought conditions, so it failed. We went to the bottom of the range, just like every other time. We had multiple tags at the bottom range, another false breakout there, and we came close but didn't hit the bottom of the range yet. And Microsoft's also at a downtrend line. So there's some things that look, those downtrend lines could be taken out, and that's bullish. And if not, we'll probably get another thrust down to these ranges. But that's near term or intermediate term outlook for these stocks, and I'd rather again wait till the elections are over, see which way we go. Alphabet actually, although it's been strong after earnings, it was the only one that Apple and Amazon and Facebook, they all took it on the chin, but Alphabet actually rallied, but it's now put in a divergent high on the 60-minute chart, so not so good there. If it breaks this minor uptrend line, there's your negative divergence. Just like you had positive divergence here, that's bullish, gives you a rally. Negative divergence gave you a correction. Negative divergence, correction. Negative divergence, correction, etc., etc., etc. Tesla, crowd favorite, also another one that may have put in a major top back when it did. Also on the same day, it was the last day of August. 5-to-1 stock split. Everybody, was bullish. That proved to be at the very least, a near-term top, maybe a longer-term buying climax. That was the post-split rally, the day of and after. And Tesla tried to get back up in there, and some of these folks that bought right at the bottom briefly came break even, but that's it. Every time we went up there, we got rejected. Boom, boom, boom. And so as long as Tesla and Apple remain below those ranges, in other words, unless they break out above, that's pretty bearish, and that's pretty formidable resistance overhead on those two. So that's about it. I figured I'd show you the ES chart for you ES traders. It's been moving decent, but you're usually going to get more bang for your buck on NQ. That's why I prefer to trade NQ. It's just, it's more concentrated. It's only 100 stocks instead of 500. It's mostly tech stocks, and those tend to be higher beta. In other words, when they're going up more than utilities and REITs and everything else that drags down the S&P 500. That's what makes the S&P 500 a little more safer investment, a little less volatile, as you have those sectors that tend to cushion. REITs and Procter and Gamble, utilities and dividend paying stocks, things like that. But either way, a nice lift because we had a pretty broad-based rally, came up close to this resistance level. That was your last objective long entry on that back test yesterday that was highlighted, and that's what that looks like. And then finally, to wrap it up, if you're a SPY trader, SPY, I have a couple boards here, but yeah, this is the one I'd look at. We have a pretty significant resistance. I highlighted in today's video. And that's 337.99. I think that number is, yes, 337.99, which is the bottom, or I'm sorry, the top of this gap right here. There's where you closed. There's the gap down. There's your gap. And as I pointed out earlier today, we had a gap backfill. So that in itself, when I did that video, like I said, I harped on a very objective time. If you were long here on the divergent low or long in the breakout, above this, trading range or anywhere in between, that was an objective time to book profits on longs, again, for an active trader, and or maybe go short for the pullback. The pullback in the Nasdaq 100 was a little better. We had again, about better than a 1% pullback, and it was close to that actually on SPY as well. Can't click right on it. I'm going to move the lines here. I can do this for you. Tell you exactly what the pullback was from the high to the low. It was about 1%. There it is. Okay, I'll wrap it up here. So that's it. I think if you took the shorts at. Here you are. Okay, sorry for that interruption. That's my Google Home Hub, and I don't even think I triggered the keyword. She just started shouting out something about hydrographics. Okay, that kind of threw me, and the volume was real loud. All right, that's it. There's your pullback, minimum target right there. You can book profits or set a stop wherever, depending on how much you're going for. And, I think if you get down there close to 155, probably a good time just close it out. And, a little uptrend line as well you can watch. If that's broken, that might lead to a little more downside. It could be quite a bit more. PPO is making that bearish crossover. So very near term, looks like maybe a little more downside, but you have to respect this big divergent low that was put in right there again. So I'm only focused on, very near term stuff right now, trade these levels, and I'm going to pick it up tomorrow. And I'll also start broadening my horizons, looking at other things. I told you guys I'd review commodities. I've taken a look at that. I'll give you a little update on gold today. And, once I get a good handle on where we're going to go after the elections, then I'll start drilling down into individual sectors and stocks and try to get some swing and trend trade ideas out there for you. This has been Randy Finney with Right Side of the Chart. Have a great day.